We are back, and apparently Trump has a very, very, very big regret regarding the Fed chair. Now, is it going to be the current Fed chair or the previous Fed chair? Because there's a lot of misinformation happening online, of course. But I'm going to go ahead and break that down to you. Plus, we've got some Ripple news, and we've got some price action news. We actually had a positive streak of ETFs finally come in, which is incredibly important because we're not doing great at all when it comes to the crypto markets. And things are just a little bit sluggish this week. Also, we have the big meeting at the White House between the crypto people and the banks, and there'll probably be more meetings to come. But let's go ahead and listen to this clip from Scott Bessent on the Crypto Clarity Act and what needs to get done. Because you have to remember, we not only have a pro-crypto president, pro-crypto administration, pro-crypto Fed now, pro-crypto SEC, CFTC, and everything in between. So let's go ahead and talk about it and see what he had to say. And as always, welcome back to the O Show, everything crypto, every single day. Thank you guys so much for being here with me today, especially to our channel members. Make sure you guys smash a like. Shout out to Mike, to Lawrence for the $10 super chat. Thank you so much for being here. Mr. R, Mr. Dale, John Legend, Gorgeous Alexandra, Mike again. And yeah, let's go ahead and get into it. We've got quite a few people in here and lots of stuff to cover. And I'll let you guys know about my day yesterday that I did, my little day that I went on. It was very interesting. All right, so this is a clip right now from Treasury Secretary Bessent and Miss Maria. So let's go ahead and hear what he has to say.
Quick on this crypto legislation that seems to be hung up in the Senate. Secretary, do you expect that the Clarity Act will, in fact, come back for a markup? And why are we having a debate about bank margins? Where do you stand on this? Do you think crypto platforms should be able to pay rewards, pay customers for moving stablecoin or money out of traditional bank deposit accounts and keep them on crypto platforms? Where are you on that issue?
Again, Maria, I think what we're seeing in the crypto market over the past few months means more than ever that the U.S., we need market structure, we need clarity, and we need to get this across the line this spring. We got a few recalcitrant actors who said, well, it'd be better to have no legislation than the legislation we don't want. And I think both on the banks, the other crypto firms are united against them. So we need to get this across the line. The U.S., under President Trump's leadership, the U.S. is becoming the crypto capital of the world with our best practices, best regulation, and for crypto to remain a viable digital asset and move forward, we need to get this Clarity Act done.
So you think it will be? It'll come back fairly soon then?
I'm optimistic, and there's bipartisan support here.
Okay, so there's a lot to actually unpack in this particular clip. So let's go ahead and talk about it. So she goes in hard and she's like, okay, what about the yield? What about the crypto yield? What's the crypto yield? He is a very well-trained politician and says, you know what, we've got strong bipartisan support. We need to get this through. We want to become the crypto capital of the world for multiple reasons. Economy struggling. America's an absolute hot mess, which we'll get to that in a second. But he didn't answer the question about the yield, the stablecoin yield. And that is the issue. That is what is being held up, is the stablecoin yield. And the reason why this is important is because if this law passes and we don't get the stablecoin yield, now it's going to be incredibly hard to get it in the future. And all that's going to do is continue to give the banks more power. And the reason why it's going to continue to give the banks more power is because they're not going to have to offer you better products and services. They can continue with the same crooked business practices that they're doing now. And Bitcoin and crypto was created to change that. And it's not going to be able to change that if we don't get the yield on stablecoins approved. So this does sound positive for the most part because they want to get this bill and they want to get this law. They want to get it done. But he's not addressing the elephant in the room in the yield on stablecoins. But we do have some other bullish things to take a look at. This over here. So this came out yesterday. This is, and don't worry, I'm going to segue all of this together. All right. So this is a little clip over here with Trump and of course this account here. And it's incredibly frustrating because for some reason on X, even though we have AI and we have all of these really, really great tools, we're still not able to figure out if things are AI or not without having to go through Grok and all of that. Okay. Now let's go ahead and listen to to this over here.
When did you know you wanted Kevin Warsh?
So
officially, it was 2 Fridays ago. But when did you?
Well,
really
I made
know?
a mistake. He was runner-up, if you want to say that.
He was a finalist.
Yeah, he was,
first term.
and I made a mistake because I had somebody that was my Secretary of the Treasury, wanted him so badly, and I didn't feel good about him. But sometimes you listen to people, and it was a mistake.
So he is not talking about Kevin Warsh. He likes Kevin Warsh. He's happy to have Kevin Warsh in office. He is talking about Powell. He basically says, you know what? I made a mistake by having Powell in office. And he's right, because Powell has not been that great. He hasn't been great for crypto. He hasn't been great to the US dollar. He hasn't been good to the American taxpayer. So that's the headline that you're going to see is Trump didn't want Kevin Warsh to come in, which in fact, it is not true. So you have to make sure that you listen to clips and, of course, always fact check me. But again, it's incredibly upsetting that the internet is the way that it is in 2026, that we can just, these social media platforms allow for this type of thing to happen. But I digress. So that was the context of the clip. And the reason why it's important is because we have that whole entire anti-crypto army that was happening. Now, over here, this comes from Donald Trump. Trump predicts 15% growth under Warsh. And again, you guys know I'm a really, really harsh critic when it comes to Trump and the U.S. economy. And the reason why I'm a harsh critic on Trump and the U.S. economy is because I think the economy is beyond repair. I think no matter what he says or what he does, we are just absolutely screwed. I think our government is too big. I think that there's just a lot of problems all over the U.S. There's too much fraud that takes place. I think American taxpayers, we're struggling right now because we're the ones that are paying taxes and we're getting nothing back on a return, or very, very minimal back on a return. Also, too, you guys, it is crypto tax season. You do have to file your crypto taxes. We do have a link down below for some. If you want 20% off, it kind of helps you calculate your crypto taxes. If you want to use it, great. If not, but you do have to pay your crypto taxes. In addition to the decline of the U.S. economy, all these job reports and everything that's happening, that they're coming out with saying that there are not a lot of jobs, and there's not a lot of high level paying jobs, or just high paying jobs at all. Americans are suffering a lot. So I don't really know how they're going to get the U.S. economy to grow right now at all. We need a brand new industry, and I do think crypto might be a great start for that, because again, that will allow for job creation. It will allow for the expansion of the industry, which hopefully will help with the economy. But they do need to get a little bit of a wrangle on the taxes. Now, Kevin Warsh is going to probably aggressively cut rates. Okay. He can face, and however, his confirmation could face Senate resistance over the Fed independence. So there's a lot going on. But at the same time, it's great because he does understand the importance of Bitcoin and how that in crypto and how that can be used to help with the economy, because the economy is struggling. We are not doing good at all. Now, the next piece of information over here is going to be from, this is a clip from Trump's next pick, Kevin Warsh. He says, if you're under 40, Bitcoin is going to be your new gold. And I like that he said this. I think it's good, and I think it's important. I think Bitcoin can be used to solve a lot of issues, financial issues. I think a Bitcoin strategic reserve is good. I think people diversifying into Bitcoin is good. And I think Bitcoin has the opportunity to do a lot of good things. Now, he views it as a policy signal when showing the Fed may be off track. And he recognized Bitcoin's potential as early as 2021 and believes that blockchain is real innovation. We're also seeing this happen in real time when it comes to traditional finance. He also said Bitcoin is the new gold for investors over 40. Or under 40, and also sees Bitcoin benefiting from dollar weakness and global currency stress, which again, if we want to talk about global weakness and our US dollar declining and whatnot, we can go back to what's going on in China. Now, what's going on in China over here is that they're getting rid of US treasuries. They're just like, we are done. We are done. Chinese holdings of U.S. treasuries plunged to lowest level since the global financial crisis, which was, way back in 2008-ish. This is not a good sign any way, shape, or form for America. It's not. It's just not. And I think what China is going to do, they're going to go ahead and have their own power play. And what their own power play is going to do is they're going to continue to accumulate gold. They're going to continue to create factories and the utilization of AI. They've already got their own CBDC, the digital one, and they're going to expand on that. And they are going, while Americans are so worried about social issues and upset about everything but the protection of our innocence, abolishing the IRS, China is going to just kind of continue to take over, because that's exactly what's happening. And eventually that's going to kind of come back and impact the US in a negative aspect. So with that being said, that's kind of what's going on. So hopefully we get something done with crypto, because the crypto community is struggling, the US is struggling, and things are just very, very different. And we have a story about Ethereum and AI that's going to be coming up soon. I want you guys to pay attention to it, because it has to do with like Vitalik and what's being said about Ethereum and AI. And I'm probably going to end up making a second video for you guys about it, because it is going to be incredibly important, especially when we have the next bull run in crypto. And I know a lot of you aren't going to watch it, but I wish you would, because I want you to start figuring out how you can use AI and crypto together to make money. It's going to be the next sector. It's going to, and it's all part of the trifecta: AI, DeFi, and RWAs. That's exactly what it's going to, do over here. Now, should we talk about that now? Yeah, we'll talk about the Ripple news. You guys like the Ripple news. So let's talk about some of the institutions in Ripple. So according to Being Crypto, Ripple boosts institutional custody capabilities as XRP extends a 32% slide. Now, what does that mean? It's basically just indicating that they're, who they've been partnering with and who they're working with. So they partner with Figment for staking services, Securosis, I can't pronounce that, for added security support, and Ripple's platform targets banks and regulated institutions, allowing staking without running validators. Supports either networks like Ethereum or Solana. And this is great. I love it. But again, when we talk about Ripple, Ripple is just focusing on institutions right now. And I think the reason why they're focusing on institutions is because we don't know what's going to happen with the Clarity Act. So they're working on building those partnerships, because institutions will be included. Now, this is another reason why the yield on stablecoin thing is such a big issue, because that's going to directly impact Ripple. Institutions is not going to matter, because they get they get access to special products and services, but you don't, because you're retail, because they think that you're poor and stupid. Not my words, their words. Ripple CTO defends XRP Genesis against centralization claims. I like her. He's a former CTO. He's a funny guy. He's a funny guy next. But basically, another argument or debate resurfaced on whether XRPL is centralized. Critics point to XRPL history starting ledger at 32,570, not ledger 1. Schwartz says early ledgers were lost due to a software bug, not control, and argues that the response showed centralization in action, not coordination. He says that Bitcoin has more centralized moments, including a 2010 rollback. And XRP's ledger state continued, but its first week of history is gone. So basically, this is going back to the early days of XRPL, and comparing Bitcoin centralization to XRP's centralization is very, very, very interesting stuff, because XRPL does have mechanics that allow for clawbacks and allow for, halting of transactions and different things like that. Bitcoin does not, but Bitcoin did have a rollback in 2010. So it's going to be an interesting debate. I'm not going to argue with the maxis about it. I'm not going to argue with the XRP army about it. I don't care. I am here to make money. I'm here to make money. I'm here to educate myself. I'm here to provide a better life for my daughter. I'm also here to chat crypto with you guys and entertain you all. And I don't really care about all the little back and forth drama BS, because I would rather spend my time expanding my mind, using critical thinking, and just living the best quality life, not arguing with people on the internet over things that they're not going to change their mind about. So it is what it is. And with that being said, I hold both XRP and Bitcoin. And if XRP drops below $1, I will buy more. Very simple stuff. Now, over here from Cointelegraph, it says XRP loses aggregate holder cost base, triggering panic selling, blah, 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 blah. It basically saying it's mirroring 2021 and May 2022, the consolidation phase. And this is something we've talked about, though, like not necessarily with XRP, but just crypto in general and Bitcoin in general. We are just seeing things kind of go sideways. We really are. We're holding on to the support over here at about 68,000. If you take a look at the daily, we're just going sideways. That's literally all that we are doing. We're consolidating above the $68,000 area. Also, too, if you are not a great trader, the key here is protecting your capital. You could dollar cost average, or if you want to get into more of the trading with the prediction markets, we are partnered with OG Markets. We've got the QR code up there and down below. Your business, if you want to do that or not. But there's different ways to operate in Bitcoin and crypto right now. But number one is protecting your capital. So as far as crypto goes right now, Bitcoin goes on the daily, we're not looking good. We are underneath the EMA 200. This is the daily though. We're holding on support to about $68,000, and it does look like we might drop. So we might get a new consolidation range between about 74 to 62,000. Ethereum is also slumping. Everything is slumping right now. Solana is slumping. XRP. We knew XRP was going sideways, though. I mean, on the weekly, it looks a lot different. We are holding above the EMA 200, but losing it. But they're talking about a 2021. What is it? They're talking about 2021 and 22 accumulation. This would be more of an accumulation. So that's why I don't like a lot of these articles. I don't like a lot of people's technical analysis. To me, this is going to be accumulation. Once you have established that drop between 2022 to 2024, it was a 2-year consolidation point. So there's that. But as far as Bitcoin and crypto goes, we know we have the meeting today. And with the meeting happening today, hopefully we might get some, if it's bullish or bearish, we'll get some price action. And me personally, I wouldn't want to trade this. It's scary. It really, really, really is. It's not looking good. And the IBIT chart is still looks absolutely disgusting, which is interesting because we do have inflows coming in. So we'll talk about that in a second. Now, all right, this is, hold on. Got to get over here. Hold on. That was technical analysis. Sentiment is most fearful since 2022. Not really, because if we drop even lower and we get to like 50,000, we'll see a lot more fear coming. Now, U.S. Bitcoin ETFs register back-to-back inflows for the first time in a month with a total of about 616 million, which is good. That means money's coming in, but it might not be enough to hold things up. It might not, so we'll see. But let's get into some other crypto news and things that are happening over here. So Vitalik. So Vitalik, and again, this is the Ethereum AI thing. Vitalik outlines updated AI vision across key areas, which includes trustless AI interaction tools, economic infrastructure for AI agents, cyberpunk self-sovereignty with local LLMs, and scaling markets and governance system. So basically what's going to happen here with Ethereum, and Ethereum will, as of right now, is probably going to lead the AI sector, the little AI boom. They're going to be focusing on their layer 1. It's Wall Street's chosen one. And I know that there's other layer 1s that can most definitely compete, but Ethereum is one of the most well-known ones, just like when we talk about Ripple taking over the banking industry or being able to effectively compete with the banking industry. That's kind of what we mean. And that's because they are so well-known. And I think if we didn't have if the XRP army wasn't as strong and loud as you guys are, we wouldn't have these ETFs at all. But basically, AI is going to be built, like they're going to be focusing on building their little own ecosystems for AI so AI can operate and it can do its thing. Now, hold on a second. Sorry, I'm tired today. I'm tired and I'm just like, It's like, it got like overcast outside today, which was fine. And then, I don't know, I'm just kind of like, today. I don't know. And I went out for like a little bit yesterday. I wanted to go to the beach, but I didn't have enough time to go to the beach because I got done with work late. So I needed to I need to make sure I went to go get my kid. But I went to this hotel to eat because it looked really pretty and I wanted a nice view. And of course, the damn thing was haunted. And of course, when I get in there, I felt it. And I'm just like, ugh. So I have like a little bit of like creepy vibe. I didn't know it was haunted until I left because then I Googled it. But yeah, they definitely have lots of stuff going on. And when you go into old buildings with old money, like a lot of old money, you'll get those feelings. Well, at least I do. I pick up on that stuff. But Pasadena is historically known for, and I worked in Pasadena. I worked at the thrift store for like 2 years, and it's just the most bizarre place because you have super, super extremely wealthy people, and then you have like straight poverty. And they would come into the thrift store and they would just argue. Like they would argue about getting the lowest price and like all kinds of stuff. And it was just like, and I don't know who was worse, the super, super rich people or the super poor people. I will say that the homeless people that ended up becoming my friends, they were pretty rough. Some of them were vile. But you know, you have to be able to have good communication skills so people don't hurt you. And, but they were pretty cool. But there was always like a fight between everybody in there all the time over God knows what. But yesterday was an interesting day. But anyways, let's get back to the news. And today I have to go help my sister. She broke her rib apparently, or fractured her rib. I don't know. I don't know how she does these things. Anyway, so Bank of England and Chainlink. Bank of England taps Chainlink to support on-chain security settlement, which is great because this is all regulated. It's all part of what needs to be done. Now, the program tests on-chain securities, settling with central bank money, and will launch in spring of 2026 and run for 6 months. No real funds used, and the program is for research only. The reason why this is so important and so good is because Chainlink links to everything. The links to everything. And that's why it's one of my solid picks for the future. Long term, in my personal opinion. And it's got that ETF. Also, Chainlink's co-founder, he basically says, he talks about 2 reasons the market feels different. And he says, and it's actually, I liked his take here a little bit. He says, no major blowups, and shows that crypto is more resilient to volatility than before. He said, growth is driven by real utility, not speculation. And it's true, the industry is starting to mature. And he suggests that crypto future may center more on-chain RWAs than tokens alone. Now, what does that mean? That basically means that the industry is growing up. It is maturing. We're kind of at this weird standstill right now. He does say that nothing's blown up, which he's true to an extent. But again, you know, all the drama that happens in crypto, all the accusations and different things. But I think the next run will happen. It's just going to take some time, and we're going to need the Clarity Act passed. And if we don't get it, things will really get interesting. Now, this... Hold on a second. This over here, we have Kevin Warsh, who's the Fed chair, who's taken Powell's job, talking about how important Bitcoin is. And then we've got the Reserve Governor Waller that says Bitcoin's volatility is just part of the game. It happened before. Bitcoin is down to 63,000 8 years ago. If you would have said it was 10,000, you would have said this is crazy. And he's right. He's right. So moral of the story is, it's nice to hear that our public elected officials, or whatever the hell they are, talking about it. But this is actually even more important over here. It's going to be this post over here. My computer is just not doing what it needs to do here. This is from Thomas Massey, and let's hear what he has to say about Bitcoin and the Federal Reserve, because he's establishing a bill that is going to get rid of that.
Of this government. And I was actually listening to an audio book by Saifedean Ammous called The Bitcoin Standard. And I'll warn anybody who wants to listen to that book, the first 80% of it is not about Bitcoin. It's about money and what is money, which I think is important to understanding Federal Reserve. And also, but he has to lay that down so he can explain what Bitcoin is, because you can't assume everybody knows what money was. And frankly, I learned some things or picked up some vocabulary that I didn't have about it there. And I was listening to that tape, and I'm like, it is way past time to reintroduce a bill to end the Federal Reserve. And so I put it in the hopper, and I thought, man, I may be the only one. Maybe I'll get 2 or 3 co-sponsors, but I don't care. This needs to be done. I got 24 co-sponsors. So the number of co-sponsors of the bill to end the Federal Reserve in 10 years has gone up 10x, which is remarkable. Yeah, that is no solutions of this government.
So this is actually, I love that he's doing this, wanting to end the Federal Reserve, because what do we need the Federal Reserve for? We really don't. I mean, they've done a terrible job of managing our money. They've done a terrible job with managing inflation and controlling everything that's happening. All I know is that we are in pretty dire straits right now. It doesn't quite, it feels, it's the same vibe that I felt in 2008, but it's weird. It's a really weird vibe that we're seeing. Like there's not a lot of jobs. We have this technology we know that's going to take over and destroy a lot of jobs and like automate everything. And if you're like, oh, my job's safe, I'm a blue collar worker. No, honey, they're coming for your job. Unless there's laws that protect how AI is used. Because I know in California, I think they're going to pass a law indicating what AI can and can't do for attorneys. Like, you're not allowed to upload personal things into public AI, like any of the lawsuits and stuff, which is good, because what people don't understand is that these AI models or these AI programs, it's all a database. That's all it is. It's just a massive database, just like the internet. So things are definitely going to get interesting in that, but it's just like a weird vibe. It's almost like impending doom. It's like we like those of us that lived through 2008 was like, okay, this sucks. It was terrible. But it's like it feels like we're in that again, but we're just used to it. We're like conditioned to feel the strain. I don't know. There's just weird. It's like a weird vibe. I don't know. And I'm not trying to be pessimistic, but it is what it is. Now, this kind of goes into the Federal Reserve. So the Federal Reserve to roll out skinny master accounts this year as broader crypto rules remain in limbo. And this is from Governor Walla. So basically over here, he says, hold on. These accounts give limited access to Fed payments, no interest and no discount window borrowing. Fed Waller says crypto with euphoria tied to Trump's return is fading. So I don't know. This wasn't a really great explanation of this. While we work on broader cryptocurrency market structure and bill stalls and markets falter, but they're putting out a skinny master account. So I don't know. We'll see. It has to do, I guess, with the drama between crypto and the Fed. Now in other news, I don't want to talk about this. Do I even care? I don't really care about SBF. SBF basically Sam Bankman-Fried came out and says, agree with this, but FTX was never bankrupt. I never filed for it. The lawyers took over the company and 4 hours later, they filed a bogus, blah, 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 blah. This is the thing. He committed a crime. They did a lot of terrible things with customers' money. A lot. FTX did a lot of revolutionary things in the space, but they did a lot of bad things. And again, it's like, if you go back and watch my old videos from when FTX blew up, his parents were so directly involved in everything. Alongside, of course, Warren and Schumer and Maxine Waters, they had a little bit of say. But what they were if you read Sam's proposed crypto law that he wanted to pass, it basically wanted to make FTX the end all be all, the head honcho when it comes to crypto. The government was going to use it, all kind of stuff. It was such a weird thing. So maybe he wasn't as involved as people thought he was. But it's just a weird, it's a weird effing thing, a really, really, really weird effing thing, especially with all of the JE files and all those things that are coming. Again, he's not directly tied to that, but people that his family knew are, and it's just a weird, I don't know, man. I feel like his parents put him up to a lot of stuff and he just should have done better and he didn't. So I don't know. It's just a weird thing. But anyways. I wanted to talk to you guys about two things. So two things. Mr. Beast, they acquired financial services Step. And the reason why they did that is because they says that when he was growing up, no one taught him about investing, building credit, managing money, blah, blah, blah. Okay, so much of us. That's most of us, okay? Now, the interesting thing about that is that Tom Lee from BitMine, that was a Bitcoin mining company. They turned into an Ethereum treasury company. They own a 4% stake in Beast Industry, or in Beast. What is it? They own a 4% stake. Okay, and with that being said, it's kind of wild. So Mr. Beast has a very, very large YouTube presence. He's got Mr. Tommy Lee, who's invested in him. And this account posted it over here too. And Chamath is invested as well. But I have a feeling, I don't know if they're going to be a bank. They're of a financial services entity. But what I do think they are going to do, I think they're going to gamify financial literacy. And they're going to do it with Ethereum. And the reason why I'm saying Ethereum is because Tom Lee BitMine owns a 4% investment in Beast Industries. So that would make sense. So I don't know. Things are definitely getting interesting. Very, very, very interesting. And then I want to just talk about this as well really quickly. So, you know that California, which again, taxes are a scam, and the Fed, taxes are a scam, it is what it is. But because California wants to propose a billionaire tax. So I want to talk about this a little bit. Quick, I'm born and raised in California. I think that taxing a particular group more than others, I'm not really that big of a fan for it. Okay. If we want to tax people, it should be the same tax rate. It should just be the same tax rate. I'm just not seeing why one person should be paying more than somebody else just because they have more money. I also think that the accredited investor rule should be banned. I think that there's a wealth gap in America, and I think that that's the biggest problem, not the social issues we have. And I don't like the billionaire tax because the way that they're going to word it, I guarantee you, and again, Bimbo on the internet, entertainer here, the way that they're going to word it is they're going to word it to where it's going to impact everybody, but no one's going to see that because when they introduce bills, it's not in plain English, and they're very, very they're long. It's like 1,000 pages, 400 pages, 300 pages, and Zuckerberg's leaving. He's leaving California. He's going to move in Florida. And there's a fun little trick you could do with your taxes is if you live in a state 6 months in a day, you're technically that state's resident, and then you come back to California. You avoid a lot of those taxes. But he's the latest billionaire to buy a home in Florida, which is kind of interesting. Balaji was like, okay, Zuck out, Page out, Brin out, Theo out, Elon out. Most successful tech founders of all time have now exited the failed state of California. I'm not going to move because I'm on that P word, but he says the future is the decentralized internet, and he's not wrong here. So basically what he's talking about is Balaji's talking about being able to live where you're treated best and work and make money, but doing it in a like a decentralized techie manner. And that has to me, I'm reading in between the lines, and it's going to be with AI. It's being able to work and to live wherever you're taxed and treated best and make money. And again, all these taxes are a scam. So what, they're going to tax the billionaires. The billionaires are going to end up moving out, and then they're going to lose the current revenue that we're going to lose the current revenue we have that the billionaires are paying for taxes. And again, billionaires who still pay taxes. But one of the things they do is they hire really good CPAs, really good attorneys, and they grift ethically and legally within the constraints of the law. And again, you have to remember these people are smart. So of course, Zuck's probably still going to keep his house in California or have some sort of interest here. All these other people are still going to have like second, third properties here, but they're going to live in a state where they're treated best, and they can afford to go back and forth. So they're essentially grifting legally and ethically within the constraints of the law, because even middle America does that too. Upper middle class, they do that too. They'll have a house in like Vegas and they'll live there 6 months in a year. And if they're able to work on the internet or remotely, then they'll come back to California when they want to. That's how a lot of the world works. So with that being said, it's very frustrating to see. And and I know a lot of people are going to disagree with me and get mad, and that's okay. I'm not a billionaire by any means, and I'm not wealthy by any means. But when you start to impose new taxes on wealth, on amounts that people make, because of like back in the 80s, $100,000 was a lot. It was real. Like I know for a fact my mom, because I've talked to her about it, she did really well, and my dad did really well. My dad worked in TradFi. My mom was editor for the advertisement department for a Los Angeles City newspaper that's no longer being made. But they were making close to $100,000, or maybe like $80,000 back in the 80s, which was a lot of money. But if they wanted to put like a wealth tax on people who are making $100,000 a year, right now $100,000 a year in California is not really a lot of money. You're not going to be able to live a great life. You need at least like $250,000 here in California, Los Angeles County. So moral of the story is no more taxes, balance your damn budget, put it all on a public blockchain, and that's it. Anyways, you guys, that's the show for today. I'm going to get going and chill. I've got some calls and things to take care of. But thank you guys so much thank you so much to everybody who popped in and whatnot. And I will catch you guys later. Sending everybody love and light. Bye, baby.